Good afternoon and welcome to my presentation on the controlling function of management, open book management as a contemporary control tool, and how financial and budgetary controls are used in the tool. What is the controlling function of management? According to Donnell, just as a navigator continually takes reading to ensure whether he is relative to a planned action, so should a business manager continually take reading to assure himself that his enterprise is on the right course. Controlling has got two basic purposes. One, it facilitates coordination, and two, it helps in planning. Controlling has got two basic purposes. Controlling consists of verifying whether everything occurs in conformities with the plans adopted, instructions issued, and principles established. Controlling ensures that there is effective and efficient utilization of organizational resources so as to achieve the planned goals. Controlling is related with planning. Planning and controlling are two inseparable functions of management. Let's discuss some of the characteristics of control. Characteristics of control are: it is a management process and it is a continuous process. Control is embedded in each level of the organizational hierarchy. It is a pervasive function, which means it is performed by managers at all levels and in all types of concerns. Management control can be defined as the systematic effort by business management to compare performance to predetermined standards, plans or objectives in order to determine whether performance is in line with these standards. It is also used to determine if any remedial action is required to ensure that human and other corporate resources are being used in the most effective and efficient way possible to achieve corporate objectives. At my job, bureaucratic controls stem from lines of authority, and this authority comes with one's position in the organizational hierarchy. Controlling is forward-looking because effective control is not possible without the past being controlled. Controlling is always looking to the future so that follow-up can be made. Controlling is related with planning. Planning and controlling are two inseparable functions of management. Without planning, controlling is a meaningless exercise, and without controlling, planning is useless. Planning presupposes controlling, and controlling succeeds planning. So control is that function of the system that adjusts operations as needed to achieve the plan, or to maintain variations from system objectives within allowable limits. The control subsystem functions in close harmony with the operating system. The degree to which they interact depends on the nature of the operating system and its objectives. Stability concerns a system's ability to maintain a pattern of output without wide fluctuations. Rapidity of response pertains to the speed with which a system can correct variations and return to expected output. From these definitions, the close link between planning and controlling can be seen. Next, let's discuss open book management, a contemporary control tool. Open book management is a way of running a company that gets everyone to focus on helping the business make money. It throws out the old approach to management in which bosses run the show and employees do what they're told. It takes those trendy new management ideas, empowerment, TQM, teams, and so on, and gives them a business logic. In an open book company, employees understand why they're being called upon to solve problems, cut costs, reduce defects, and give the customer better service. If you could tear apart an open book company and compare it with a conventional business, you'd see three essential differences. Every employee sees and learns to understand the company's financials, along with all the other numbers that are critical to tracking the business performance. That's why it's called open book. The numbers are up on the wall, in the handouts, on the computer network. Training courses and regular meetings teach everybody what they mean, so employees know whether the company is making money, they know how much, and they know why. Employees learn that whatever else they do, part of their job is to move those numbers in the right direction. They may be salespeople or software designers, machine operators, telephone operators, etc. Everyone is part of the business and is accountable to one another for their unit's performance. Employees have a direct stake in the company's success. If the business is profitable, employees receive a cut of the action. If not, they don't get anything extra. Open book management teaches people to quit thinking of themselves as hired hands and to start realizing that they are business people. Their job security, their chances for advancement, their hopes for the future all depend not on the whims of some boss or department head, but on the company's success in the marketplace and each person's contribution to it. Open book management shows how the principles are implemented in real business situations. How are financial and budgetary controls used in the tool? It is by getting the information out there, telling employees not only what they need to know to do their job effectively, but how the division or the company as a whole is doing. Every company has some pivotal operational numbers, such as on-time shipments and customer returns. Managers understand that employees have to see and track those numbers. Financial controls include key financial targets for which managers are held accountable. Managers who are not executives also have financial responsibility as well. Individual department heads are typically responsible for keeping expenses within budgeted guidelines. In either case, financial controls place constraints on spending, and increased spending must be justified by increased revenues. The open book management allows employees to participate in increasing profitability as well as keeping costs in line. Open book management is about the why, and in a business, the why is told by the financials. So along with the operational figures, people are shown the income statement, the cash flow statement, and the balance sheet. The training will provide employees with the skill to interpret and know what those statements mean. Everybody is a part of the company, everybody sees the same information, and the numbers send a powerful message to employees. Open book management teaches the basics of business. Employees are able to track and measure output and figure out how to improve it. They watch costs. If they need new equipment, they can prepare their own capital authorization requests for the corporate office. They get involved in the annual planning and budgeting process. The members of a company review one another's performance. The open book management makes sure everyone shares directly in the company's success and also in the risk of failure. If you want to think like owners, they must be rewarded like owners. This isn't a controversial proposition. Many companies already have some kind of profit-sharing bonus system or employee stock ownership plan, but an open book company is different. Employees know what they're working for when they start the year. Like business people, they track their progress by watching the numbers. Traditional companies want participation. They call meetings, they set up project teams, cross-functional teams, and self-managing work teams. So many teams, but since they don't share financial information, not many employees know how their work affects the bottom line. As an example, I pulled up a company called Manco. This company sets annual targets for net earnings and return on operating assets. If employees hit both targets, the company makes bonus, meaning that employees collect payouts ranging from 10% to 50% of their total compensation. The open book management empowers employees to make decisions based on what they know.